Squarespace, one of the leading software as a service website development provider, announced its plans for direct listing and released its draft prospectus in April 2021. We are very excited because we have been following Wix, another leading player in this space, for very long. And now we finally get to see Squarespace numbers in the prospectus. So how do they fare? How does Squarespace compare with Wix? Which is the better business to invest in? Let's talk about this today. In particular, we'll first talk a bit about Squarespace listing on how much is the listing price. Then we'll do a bit of product comparison between Wix and Squarespace to see which one is better. And then we'll look at its market share to see which one is leading. Then we'll discuss some interesting stories about its foundings of the two different companies. And then we'll discuss interesting points about their financials. And lastly, we'll also bring attention to you on some of the red flags that we see in Squarespace draft prospectus that we think you definitely want to know and not miss out before you decide to invest in the company. So before we start, I will really appreciate if you can help to smash the like button and subscribe button for me. Preparing this video takes a lot of effort, including reading hundreds of pages of prospectus for Squarespace and also thousands of pages for everything we can find on Wix. So if you can please do us a favor by hitting that like button, that would be really helpful. And this will motivate us to produce more of such videos for you. And a quick disclaimer first, that everything we discuss today is not an investment recommendation or advice, and is purely for educational purposes only. So with that, let's start with Squarespace direct listing. So in April 2021, Squarespace announced that it's planning a direct listing instead of the traditional IPOs, which stands for initial public offering. And the exact timeline is not known yet. Probably we think that it could be around middle of 2021. And the path of direct listing is becoming more common, where we have seen other companies adopting, so like Palantir, Slack, Spotify, and Asana recently. And so what is a direct listing? Is basically that the company doesn't need any money. So in the direct listing, it doesn't raise fresh capital. And it's just a matter of selling out of shares by the existing shareholders, existing investors to get some money. And usually there will be no lockup periods for any shares in the initial days of trading, unlike an IPO. So how much is the listing price? The listing price won't be known until the first day of trading, and it will really depend on the market demand and supply on that day, because this is a direct listing. But we can get some inference potentially from the prospectus, where we see in the first quarter of 2021, Squarespace actually issued some Class C common shares to different investors at about $68. So that could be used as a gauge. But in the prospectus, they also mentioned that we should not place any reference to historical sales price, because the opening price in the public market on the first day could materially differ from any of the historical prices. So a quick thought about why now? Why is Squarespace listing now? In 2017, the founder, Anthony Casalena, actually mentioned that they didn't have any immediate plans for IPO because they have been profitable. They don't need the money. He would rather focus on increasing the sophistication of the product. However, now they are going for a direct listing. So why? One interesting point that we see from the prospectus is that in 2017, the founder and CEO, Anthony, was actually granted about 4.5 million of Class B common shares. However, those shares will be forfeited if Squarespace doesn't publicly list itself within 3.5 years' time. So 3.5 years from 2017 August is about 2021 February, and they have extended that deadline to August 2021. And I think this gives a lot of motivation for the founder to try to list the company, because if he doesn't list, the 4.5 million shares could just go to waste. They'll just be forfeited. And let's say if the share price is $68 per share, that would translate into a $300 million worth of shares. Like, would he want to just see those shares go down the drain for nothing? So that's why we think that could be a motivation factor for him to list the company as soon as possible in this year. Now let's move on to some product comparison between Squarespace and Wix, and we'll start with Squarespace. So Squarespace and Wix are both DIY website development provider. So you can do it yourself, where their idea is you can create websites easily using their products in an intuitive way. So this is Squarespace website, where you can see that it offers quite a lot of different features. Like you can create simple design websites. You can use their templates, which are so-called award-winning, and then you can set up your blogs, and then you can do some analytics. You can even run an e-commerce site on it, where they'll help you to deal with the checkout, the payments and taxes, and then you can schedule your appointments. And there are also some marketing tools like email marketing or even search engine optimization tools for you. So it's a pretty comprehensive product if you want to just set up a simple website, intuitive and easy with good designs. The same thing for Wix, where it's a DIY platform and is as equally beautiful. And here Wix has a bit more products. You can see here Wix have marketing tools like email marketing, SEO, Facebook ads, and then some tools for you to manage your customer experience, including chat and forms, or even invoices, or even stuff for you to make a logo. And then Wix, on top of its solutions for simple design, which includes the Wix ADI and editor, it actually has a lot of powerful solutions if you decide to make your website more complex, if you have the ability to do so. So their Editor X and Core by Wix is actually very powerful, that allows you to do very complex designs, flexible dynamic designs in a low code or no code environment. So even if you are not a good developer, you do know how to code, you can still use them. And Wix also targets their solutions, their websites for a lot of different verticals. So this would be able to fulfill the demands of those verticals better. And just a quick look at Wix website, it can do the same thing. Like you can do design, you have templates, you can do a blog, you have logo makers, and then for other website essentials, you also have SEO tools. You can even set up a mobile app easily through its solutions. And then Wix also has e-commerce solutions, so you can set up your store where they'll have solutions to help you with fulfillment, dropshipping, online payments, etc., and even point of sales terminals. And lastly, on growth, you also have marketing tools and video makers and Facebook ads, etc. So there are a lot of product review content of videos out there in the public, where different experts has comment on them. So we have basically looked at a lot of them, and we'll just save you the time, since unless you want to create a website yourself, then you can go and watch them. But as an investor, we just want to know roughly what's the summary view out there. And we think this quite nicely represent the summary, which is that if we look at first here, this review, on the left we have Wix and on the right we have Squarespace. The author was saying that in terms of ease of use, Wix is better, because Wix is really a DIY, and what you see is what you get type of solution, where you can drag the text or images easily to any part of the website. You can rotate them easily. But for Squarespace, it's actually more limited. It's still do it yourself, but they actually align your items in sort of like a square grids or just grids. So you're less flexible on your design over there, and it'll take you longer to change some of the designs or colors. So ease of use, Wix scores. And then for search engine optimization, Wix also scores better. But for blogging, Squarespace is actually better, because Squarespace has more advanced features for blogging. It started out as a blogging website, competing with Blogger. And then Wix has more applications, especially is larger. And then on support, the author thinks that Squarespace is slightly better, but for value for money, Wix is the winner. And then this is another product review, where the author looks at what type of provider is suitable if you are setting up your websites for different purposes. So if you are doing it for fun, Wix is very good, and Wix has free products, so you can literally create your website for free. And then for small business, both Wix and Squarespace are good. For blog, the WordPress, which is a content management system provider, is better, CMS. And then for web designer, because of Wix advanced features on the core by Wix and also Editor X, Wix actually is pretty good together with Webflow. So this gives us a rough sense that overall it seems like both Wix and Squarespace are pretty good, but probably Wix is a bit more versatile and cater to a wider range of market segment. Now let's talk about the actual market share. So based on this website, as we can see here, just a quick start with WordPress first. From 2011 to 2021, we can see WordPress actually has a big market share, and we all know that a lot of websites are built on WordPress these days. And WordPress has about 40% market share today, and another 37% of them actually doesn't use any CMS provider. So people just do their own coding, set up their own website. And then in terms of the DIY providers, Squarespace and Wix are the top two providers. You can see over the years, they've been competing pretty well with each other and leading the market segment. And in 2021 April, they are actually on par, having a 1.6% market share in this very fragmented market. So this is what this website says. But if we look at Google Trends, it actually tells us a different picture. So Google Trends show how many people are searching for these terms, and we have put in the terms of the different companies in this space. And you can see here, Wix has tremendously grown since 2004, where it has just accelerated, overtaking GoDaddy, and GoDaddy also does other products. So people searching for GoDaddy might not just be doing website where they could be looking for domain hosting and stuff. And then for Squarespace, which is the red line, it actually increased and then overtook other competitors, but it's still quite far behind Wix. And so it's telling a slightly different story here. But now with Squarespace releasing its draft prospectus, we actually have the actual numbers from the companies. So here we have a chart showing the number of paid subscriptions for both companies. As we can see here, Wix is the blue one. We have more data going back to 2010. And Wix right now have about 5.5 million paid subscriptions compared to Squarespace, which only had 3.7 million paid subscriptions. So that is about, I think, about 70%. So Squarespace is 30% behind Wix now. And in terms of the growth of number of paid subscriptions, Wix has been growing pretty well. It has come down a bit recently. And in 2019, it's slow because Wix was focusing on monetizing the user base more rather than chasing after volume of users. So in 2020, they were actually pretty on par with Squarespace. An interesting thing about Squarespace is that its cash retention rate is actually far below Wix. So cash retention rate is basically how much your existing cohort is paying you this year compared to last year. And the existing cohort, I mean the existing cohort that existed at the end of last year. So if last year they were paying you $100, then for Squarespace, this year they are only paying them $85. That means $15 is gone. I mean, this is a subscription service. So the cash retention rate will be affected by the churn, meaning like some of the paid users from last year just drop out. Either they go out of business or they decide to not use your service anymore. But it will also be affected by the average cash paid by the paid users. So if you increase your price or if you cross-sell or upsell them more product, that will increase the cash retention rate. And lastly, for Wix, because Wix actually have free users, when those free users decide to convert into paid users, that will also drive up the cash retention rate. And for Wix, historically, the cash retention rate of existing cohort has been about 100 to 105%, far higher than the 85% that Squarespace has. And this fundamentally is partly driven by the different business models and pricing model adopted by the two different companies. So Squarespace, here we show Squarespace pricing plan, which range from $12 to $40 a month. And they only have a free trial model, which means that you can sign up for it. I think the free trial is about 2 weeks. You can test it out, but after 2 weeks, you have to pay. If you don't pay, then you lose all your things that you have built. While Wix actually allows you to build your website for free. So that's a freemium model that Wix is adopting. So they actually get in a lot of free users, much more than their paid users. I think the conversion rate of free to paid users is only about 3%. So you can imagine how big the number of free users Wix has. And basically you can use it for free for as long as you want, but it comes with certain limited features and also Wix advertisement there. So some of the times people, when they want to do their business bigger or they want to be more serious, then they will convert from free model into paid subscription plans. So that will help to drive the cash retention rate. And this is very powerful. So here we see for Wix, as of 2020 Q4, this is how much they are collecting from their cohorts per quarter. And because they have a lot of data on their user behavior, past user behavior, they can actually predict how much they can collect from this existing cohort in the future, in the next 10 years, if they decide to stop accepting new cohorts, new users, how much would they get? And you can see here they are budgeting that this would not only just stay the same, but it will actually increase down the road when some of those customers start to use more of their service, buy more of the expensive plans, or switch from the basic website plan to an e-commerce plan. So the overall cash retention is more than 100%. So here, which model would you prefer? Do you prefer one where every year your existing user cohort pays you only 85% of what they used to pay you last year? Or another one where your existing user cohort pays you more than 100% of what they used to pay last year? So comment below to let me know your thoughts on which business model would you prefer if you were to run this business, or which would you prefer to invest in? Now let's jump to the story of the founders very quickly. So Squarespace was started by Anthony Castellana in America in 2003, while Wix is actually started by three friends or brothers in Israel, by Jorah Kaplan, Nadav Abrahami, and Avishai Abrahami. These two are brothers, and they started it in 2006. So one thing interesting, so is one-man team versus a three-man team at the start, and Wix was started 3 years later than Squarespace. And one interesting thing about Squarespace is in terms of corporate governance, Anthony is actually still the CEO and also the chairman of the board. So usually we would prefer the chairman and the CEO roles to be separated so that they are more independent and more corporate governance. And for Wix case, that's good for Wix because Avishai, who is the CEO, is not the chairman. The chairman is Mark, one of the partner in the venture capital firm that invested in Wix very long time ago in their early years. And if we look at the management team for Squarespace, these three management team sits in the board too. And they are the Chief Product Officer, CPO here, then CFO, and also the General Counsel. And here we can see here, they only recently joined Squarespace in 2020 or 2017. So that's just a few years with Squarespace. Meanwhile, for Wix, for their key management team, they have either started with Wix right from the start in 2006 or another year later in 2007 or 2008. And then even for the CFO, Leo Shemes, who joined in 2013, right before the initial public offering, he treats Wix very well. I mean, this management team has stayed with the company for so long, growing with the company together, going through the tough years. And for Leo, who joined later, even though he has joined later, he has once said publicly that even though he's offered a few $1 million to leave the company, he said he just won't do it. Wix is like a family to him. Like you see such kind of brotherhood within this Israeli team here, a very strong culture in Wix, and the whole management team has grown together with the company, so they are very familiar with the company's strategies. While for Squarespace, it's a more newer team, and this actually relates back to one aspect that Anthony has done in the early years, where Anthony is a very strong guy. He can basically do everything. He covered every aspect of the business in the early years, but here he's actually said in an interview with Google that he think that it was a lesson that he has learned over the years. So it's sort of like a mistake that in the early years he thought that he could do everything. I mean, he's a good programmer, he's a good CEO, he's a okay engineer and good designer. And then at that time, he thought that he could just program everything out of it, like even for design, HR, and stuff like that. But after some time, he realized that he's just too slow. Like he's not perfect in everything. He needs to build a team. He needs to build a better support structure, start hiring good people. So he waited too long on that. And that's one of the lessons that he has learned. And this is probably why we don't see such a strong and good management team that has followed Squarespace for long, just because that they have started building a core team later on in the life of the company. However, one good thing about Squarespace is that even though it's sort of like a one-man strong team right from the start, and now they've strengthened themselves with other strong players joining their management team. One thing that is good for shareholders, I think, for Squarespace is after Squarespace lists itself in the public market, Anthony will actually just get $1 base salary every year. It's just $1. But his compensation will actually come in the form of restricted stock units. And those will vest based on different price targets that the company will reach over the next 4 or 5 years after the listing. So it's broken down into 10 tranches. If the share price of the company hits $105 per share, then Anthony will get 275,000 shares. And if the share price grows crazily to $420 within 5 years, then Anthony will get a full allocation of 2.8 million shares. And if the share price does hit that level of $420, then that means about 3 million shares will be worth about 1.2 billion. So effectively, he's still being compensated well. And based on this structure, he has a lot of incentive to drive up the share price of the company. I mean, this can be seen as a good or bad thing, because if in the short term, all the things that the founder wants to do is just to drive up the share price, he can manipulate the accounting and stuff, but this spreads across the 5-year period, so it's still not too short-term period. And even without that, I mean, Anthony is already very rich. I mean, he has 49 million of Class B shares, which has more voting rights than the Class A shares. And even if the share price is just $60, he is already easily a few billionaire. Now let's come to the interesting part about financials, which I think most of the people are more interested in. Let's look at how Squarespace compares with Wix. So here we have data for Wix going back to 2010, but for Squarespace, they only released 2 to 3 years of financials in their draft prospectus. So here we are looking at the 2019 and 2020 results. For Squarespace, it earned a revenue of $620 million in 2020. And Wix is a bit quite bigger, and it earned about $1 billion of revenue in 2020. Next, we look at the gross profit. So Squarespace has a gross profit of 523 million, and compared to the revenue of 621 million, that means that its gross profit margin was 84% in 2020. Meanwhile, Wix had a gross profit of only 673 million, over $1 billion of revenue. That means a 68% gross profit margin. Does this mean that Squarespace has more pricing power because its product is better, people are willing to pay more? The answer is no. So if we look in detail about Wix revenues actually come from 2 segments. First, the subscription revenue from creative side, which is just the subscription for the websites plans. And then the other part is actually business solutions, where Wix is selling Google Suite products to the customers, or selling its own applications like Ascend by Wix, or even third-party applications in the marketplace. And also a lot of revenue is coming from Wix payments, where it helps to process the payment volumes for e-commerce businesses using its services. And we can see over the years, this business solutions has grown pretty well. So now the creative subscription component is just 80% of the business. And the business solutions, which has grown fast, actually has lower gross profit margin, just because partly because of the way accounting is done, that is done on a gross basis, and also it just has lowest gross profit margin. So we can see here that the gross profit margin of the business solution is actually only at about 50 to 30% level. I mean, it'll come back up when Wix scales better, and because Wix has much more business in the business solution sides, its overall gross profit margin is actually lower. But think about it, it's actually not a bad point, because with these business solutions, when people are using your payment solution, using your applications, they are more stuck with you in a sense. So Wix users could actually be more sticky, which is why we see the cash retention rate of Wix is much higher than Squarespace. And next, let's look at net profit. So for Squarespace in 2019, its net profit margin was 12%. And in 2020, it came down a bit because of different investment and stuff and some one-off items. And Squarespace have actually been profitable since 2016. It's amazing. Nowadays, we don't see many tech companies being profitable on the income statement. And this is the case for Wix, where look at it here. They have been losing 37 million in 2018, 86 million in 2019, and even more, 165 million of loss in 2020. And since its founding in 2006, Wix has never made a profit. It makes a lot of losses. It has come down, but in 2020, it has actually gone to more negative because Wix is spending more in terms of reinvestment. So is Wix a lousier company because it's loss making? Now, let's look at its cost in a bit more detail. So here, the solid lines is Wix numbers, and the dotted lines is Squarespace numbers. So here we can see, if we just look at the 2020 numbers, for gross profit, Wix had 673 million, which is higher than Squarespace, 523 million. But for that gross profit, Wix actually spent 438 million on sales and marketing and 320 million on R&D. And this is almost double the spend of what Squarespace is spending, even though their gross profit is not 2 times different. I mean, if you look at their R&D, Squarespace was spending 168 million in 2020, and Wix was spending 2 times, 320 million in 2020. And this is why we see Wix products are more comprehensive. It has more products. It can cater to the more complex side on the upmarket professional developers with its Crawlwit by Wix and Editor X products, where those customers actually have higher lifetime value. So Wix has consistently been spending a lot more and more area, being very aggressive to take market share to achieve that scale economics, because with the scale economics, you can actually compete better. And here we think that Wix is very willing to suffer in the short term and is willing to adopt delayed gratification, just like how Amazon used to be when they kept reinvesting a lot and incurring lots of accounting losses every year. But look at where Amazon is today. We are all think that Amazon is a good company. And this is probably why, because of this heavy reinvestment, Wix has been able to grow faster and is now bigger than Squarespace, even though it was started 3 years later than Squarespace. And when one day, if Wix decides to just cut its spending to go down to maybe Squarespace level, or even if it's higher than Squarespace level, Wix will suddenly become very profitable. While on the flip side, maybe if Squarespace decides to not spend more, then it might have difficulties catching up with competition, because right now it's not spending as much as the largest player, Wix. And an interesting point about Wix financials is, if we look at the sales and marketing expenses, just now we mentioned that it's quite different, but if you look at the breakdown, in terms of advertising expenses, Wix and Squarespace are actually not spending too differently. So Wix spent 283 million in 2020, and Wix spent just a bit lower at 220. So Squarespace have been spending 220 million on advertising, where it just focused so much on marketing campaigns and like paying YouTubers to promote its products. And then on top of advertising, Wix is also spending another 155 million on other sales and marketing expenses. So what are these expenses? Wix is actually building up its account management team and also hiring those sales and marketing employees, where this part of this account management team is to develop its upmarket professional clients that do a lot of websites development for different customers. And these clients actually have higher lifetime value and will stay with Wix longer, because this is their business. They are developing websites for other people, and this actually will help to drive the long-term value of Wix more sustainable growth. And I will just quickly go back to one point that I forgot to mention, that in terms of R&D, we said that Wix is spending double the amount of Squarespace. And if we just look at the number of employees, it's very clear. So at the end of 2020, Wix had about 2,000 R&D employees. And for Squarespace, it only had a total of 1,300 employees. And this is including everyone in different functions. This is basically the whole company. And we're saying that the whole company is less than the R&D team in Wix. And Wix has a lot more employees other than its R&D team. That's why its expenses is higher. Now let's come to the interesting points, or I wouldn't call it red flags, but more like interesting points in Squarespace draft prospectus that I would say, if you plan to invest in Squarespace, you definitely need to know. So Squarespace, as we mentioned, has been profitable since 2016. And in 2019, the net profit margin was 12%, which is very high, I mean, for a tech business. So the question is the high profitability sustainable? Is it going to change after after direct listing, after it goes public, where there'll be more cost to maintain its company, more compliance costs, more regulatory burden that they need to satisfy as a public company? And also, would there be more share-based compensation expenses? And this is one big point that we want every audience watching this video to know. So let's look at Squarespace draft prospectus. There are a lot of things here, but the main point is just that we think that there are a lot, based on how we interpret the prospectus, there are a lot of share-based compensation expenses coming soon. And these expenses, when they come, they'll hit the profitability of Squarespace a lot. And let's look at it. First, we have a bunch of restricted stock units that are outstanding, about 5.5 million of them. And in the prospectus, they actually say that these were valued at about 95 million, and they would be expected to be recognized over a period of 2.9 years, which is the weighted average period. So that translates to a expense of 33 million a year. And then here we also have Casalena Performance Award, which is how Anthony is going to be paid once the company goes public, because he's only receiving $1 salary, where those restricted stock units are worth about 84 million, and then it will vest over 4 to 5 years. So that translates to about 20 million of expenses a year. And lastly, back in 2017, that bunch of 4.5 million of stock grants that Anthony would get if Squarespace goes public is worth about 229 million, and this will hit their income statement once Squarespace lists itself. And for those who are sharp, you'll see that it actually says that these stocks would not be forfeited if the company undergoes an IPO. But here, Squarespace is not doing an IPO, it's not doing an initial public offering, it's just doing a direct listing. So, but don't worry, we have actually read the original agreement, which is captured in this box on the definition of this defined term IPO, where that defined term IPO just means the first sales of the common stocks to the public. So direct listing, based on how we interpret this statement, should count as the IPO too. So the expenses will be incurred. And this is basically what we do at MoneyWise Smart, where we read all these notes that no one wants to read, all these nitty-gritty details that no one wants to even think about because they are so dense. But we do all this so that you can know everything you need to know and not miss about companies that you are thinking of investing in. So if you appreciate our effort, please really help to smash the like button now if you haven't, and we'll appreciate that a lot. And subscribe to our channel too if you want to be notified when we cover about Squarespace in more detail in the future, when we have more information, or even we might cover Shopify, which is another great player competing with Squarespace and Wix in this space. So overall, what do you think about Squarespace versus Wix? Would you invest in Squarespace or Wix, or would you invest in both? Let us know in the comments below. And if you would like to learn more about Wix, I would definitely recommend you to watch our previous video on it. The link is provided in the slide here and also in the video description below. It's really an amazing company that we have been following for long. And if you think you're a serious investor and you want to know everything about Wix, not just the surface level, you don't need to do the work, because we have already done all the hard work for you in our multi-bagger research series, where we analyze all the great potential compounder companies with all the good attributes that we look out for. And we pour through hundreds of documents and interviews and also thousands of pages to distill the facts and analysis for you. So here you can see that for Wix, we have covered so many things about Wix, where you can pick and choose whatever topic you like. So we have covered various aspects like business introduction, what is the business about, what's their model, and then what is their moat and competitive advantages, which is very important in this capitalistic world. If you're a great business, everyone will come in and try to take your market share, try to take away your profit margin, undercut you. And then in the long term, then this company can't be a compounder if it doesn't have a strong moat, which is the most important thing we look out for. So we covered everything on moats of Wix here. Then we talk about industry and the competition in the industry. Then we talk about what risks do you have if you invest in this company, and then how do the management act? Are they incentivized to align with shareholders? And then we also talk about different aspects of the financials that we need to know about this company. And then lastly, we also talk about what kind of valuation we are looking at that could make this company a good reasonable price for people to invest in. So if you think you are really a serious investor and want to learn more about this compounder business to potentially compound your wealth for many years, do check out our multi-bagger research series at the link provided at the video description below. So thank you very much for watching, and we'll see you in our next video.
If you have enjoyed this video, please smash the like button below and subscribe to our YouTube channel. Do join us in our investment forum on Facebook using the link in the description below, where we discuss lots of interesting businesses and investing concepts. Do check out our multi-bagger research series at the link in the description below, where we discuss in detail great businesses to own and compound your wealth for the long term. These great businesses have high growth in revenue, profits and free cash flows. For example, this global payments company has grown at a compounded annual growth rate or CAGR of 60 to 80%, while this technology company has grown its revenue at a CAGR of 80%. And this other payments company has grown its revenue and profits at a CAGR of 20+%. Check out our comprehensive option series course on options strategies to complement long-term investing at link in the description below.